One trade. That's all it takes. One losing trade. To turn a disciplined trader into an emotional one. It starts with a small loss. Nothing unusual. Your strategy allowed for it. But then something changes. Instead of accepting the loss, you open another trade. Then another. And before you realize what's happening, you've broken every rule you promised yourself you'd follow. So why does this happen? Why do intelligent traders suddenly make irrational decisions? The answer isn't your strategy. It's your psychology. Every trader has experienced it. You lose a trade. You feel frustrated. Your mind starts racing. I can make it back. The next one has to win. I can't end today in the red. So you enter another trade. Not because your setup is there, but because your emotions are. That's revenge trading. It's not about making money. It's about trying to erase emotional pain. And that's what makes it so dangerous. Let's look at what's happening inside your mind. When you lose money, your brain doesn't simply record a financial loss. It experiences disappointment, frustration, sometimes even embarrassment. To your brain, a loss feels like something that needs to be fixed immediately. That's why the urge to win it back feels so powerful. But here's the problem. The market doesn't care how your last trade ended. Every new trade is independent. Yet your brain connects them emotionally. And that's where discipline begins to disappear. Revenge trading follows the same pattern almost every time. First, you lose. Then, you become emotional. Instead of slowing down, you speed up. You increase your position size. You ignore your checklist. You convince yourself that the next trade will solve everything. But it rarely does. Instead, one bad decision becomes two. Then three. Then your trading day is no longer about following your strategy. It's about chasing your losses. And that's a game the market almost always wins. Here's something many people don't realize. Revenge trading isn't a beginner's problem. Even experienced traders experience the same emotions. The difference is, professionals have systems that protect them from themselves. They don't rely on motivation. They rely on routines. They understand that emotions are temporary. But poor decisions can have permanent consequences. The goal isn't to eliminate emotion. The goal is to stop emotion from making decisions. So how do you break the cycle? Start with one simple rule. Never place another trade while you're trying to recover the previous one. Instead, pause. Stand up. Take a short walk. Breathe. Give your emotions time to settle. Next, review your trading checklist. Ask yourself one question. Would I take this trade if the previous one had been a winner? If the answer is no, don't take it. And finally, remember what professional traders already know. Losses are not failures. They're business expenses. You don't judge a strategy by one trade. You judge it over hundreds. That's where consistency is built. The market isn't testing your strategy. It's testing your emotional control. Every losing trade gives you two choices. Trade with emotion. Or trade with discipline. The choice you make in those moments will define you as a trader far more than your next winning trade ever will. Now I want to hear from you. Have you ever revenge traded? What happened? Share your experience in the comments. Someone reading your story might avoid making the same mistake. If this video helped you understand your trading psychology a little better, subscribe to PsychoTrade. Every week, we explore the psychology, habits, and decision-making that separate consistently profitable traders from everyone else. Because the market tests your strategy every day. But it tests your mind. Every single trade. Protect your capital. Trust your process. Master your mind. Master the market. This is PsychoTrade. I'll see you in the next video.